I think it's going to be a challenging trading period as we go forward. So we don't see it easing miraculously overnight. I mean, there is some positive sentiment out there. We think that the World Cup is going to be some positive sentiment. We don't think we're going to have a whole bunch of pommies rushing into our stores and pumping our inflation up overnight. But there's going to be a positive sentiment around in the country, which will help. Inflation, as you say, the negative inflation or deflation that has been sitting in the inflation numbers for the first part of the year on basic commodities, so really a correction from what had happened the prior year, will start to unwind itself as we go forward. So, but I think overall it's going to be competitive and it's going to be a challenging trading period for us. So from a growth point of view, there's some positive signs. So we would hope to see some improvement there. But it's not going to be spectacular. So it's going to be about really driving retail growth as hard as we can, competitive as it will be, and the challenge will be continuing to squeeze our business like we managed to do in the first half. And but it's not going to be easy.
Of course, Francois did point out that the operating expenses had been very well contained. You point out too in the commentary that you have benefited from those. Do you see that continuing to bolster the group going forward?
Well, certainly the fuel price issue, which delivery costs obviously a major part of our business. Fuel is probably about 9% of our costs. That is going to start to reverse itself. The first part of the year, we obviously had a benefit from the fuel price, although we have made some efficiencies as a business in terms of routing and the way we manage our fleets. So that is going to start to go the other way. Certainly bad debts, things like that, where we have had to make provisions in the prior year, is significantly improved, and we would see that continuing. We don't see that being a problem and getting any worse. But we're going to have to squeeze in a whole lot of different areas in order to keep those costs under control in the second half of the year. But as I say, it's going to be a challenge for us, but we're up for it.
Of course, Tops and Build It coming out as the star performers in the group. Tops, I should imagine, would be one area of the group that would particularly benefit from the World Cup, because I'm sure everybody's going to be downing a few more beers during that period.
We hope so. We certainly would expect so. Yeah. So I think that they will continue to grow strongly. There's no doubt about it. We continue to open more stores, they are doing nicely for us. So we have no reason to believe that situation will change. As you say, if anything, we'll see some benefit from the World Cup. And then Build It, you talked about. Also, we've seen a nice positive turnaround. Probably quite surprisingly that it's happened as quickly as we had, because last year we were under a little bit of pressure in that part of our business. But it's come along nicely this year. We've got our acts together with some of our stores that were in difficulty and dealt with those issues. So we're starting to see some positive impact there. We're not really heavily reliant on credit. It's turned around a bit sooner than we had expected, to be honest. So we're most grateful for that.
Wayne, percentage-wise, how big is the contribution from Tops and Build It?
It's not huge. Build It is about 9% of our business, and Tops about 4 or 5, something like that. But we would obviously see those growing as we go forward.
Well, Wayne, just with the recovery you're seeing in Build, it must really paint a more positive picture of the consumer going forward, because here we're looking at non-essential items. Here we are looking at people starting to spend a bit of money on renovations.
Yes. Yeah, I think so. As well as I say, we've also dealt with some issues within our own group where we had problems with stores and therefore they weren't operating properly. We've managed to get them into stores being run properly, and so there's a positive sign, certainly from the consumer side, but also it's getting our act together in those stores that were in difficulty last year, and therefore we weren't selling to them, if I can put it that way. So, but I think there's the early signs of, although we're not reliant on credit, the fact that the interest rates have come down. Sure, people are still heavily indebted, but the interest rates, we all hoped it would have an earlier effect on consumer spending, and it's taken a long time. But I think we're starting to see the early signs. But I caution that by saying, gradual improvement rather than miraculous overnight stuff.